It's Omar. It is Friday, April 13th, 2018, 8:36 p.m. in the evening, and I wanted to make a quick video just talking about simple support, resistance, and trend. If you follow me, I have my page, watchotrade on Twitter. I'm also on YouTube, and I try not when I can to make to post like what I'm watching, and I know you guys have been looking more for my videos, but it's just hard. I have a lot going on, but I have so much content that you have more than enough content to really kind of understand how I trade and learn the fundamentals. And this is what I put on my watch list for today: FTI, and I'll talk about RIGL and FTI, and just trend trading and just understanding the trend. Let's focus. I'm gonna start with FTI. Now let me just pull up FTI. All right, so let me just make this nice and big so we can all see FTI. Let's put FTI. Now, the advantage, guys, in stock trading is not going long. It's actually shorting stocks. All right, only 10% of people in the market tend to short. Matter of fact, the other day I was talking to someone at work, and someone else overheard me, and he asked me. So I had like multiple businesses, and I just closed down another one of my businesses, and I was telling him that really I'm making so much money trading stocks that I don't really need to open any more businesses. But running a business is a lot of work. I have a full-time job, and I had these businesses on the side, and I just kind of like invest in people. But you still have a stake, so you got to be involved, and it's challenging. It's a lot of stress. Trading has saved my ass, otherwise I'd be bankrupt. Trading has saved me so much. It's done so much for my life. I can't even begin to understand, to tell you how the stock market has saved me. So anyway, make the long story short, I was talking about short selling. This guy is so intelligent, right? He knew nothing about short selling. Nothing. He don't even know what shorting a stock was. Most people don't, believe it or not. I had no clue what short selling was either. A year and a half ago, when I didn't know anything about the stock market, I had no clue of what short selling was. Matter of fact, it took me 3 weeks to understand what shorting a stock meant. I started watching videos on YouTube, and I just could not grasp my head around the short selling. But short selling really is the edge, because when you look at stocks have gap up, but they have big swings down. Now this is PTI's how many years is this time frame? This is 10 years. This is a 10-year time frame. If you notice, stocks gap up, they run in trends. They run up, they run down, they run up, they run down, they run up, they run down. And even if you notice, as they gap up, they have pullbacks. And when you can catch stocks on a downtrend, you can make a lot of money. And that's what I focus on. Now, with PTI, let me just pull up the 1 year, 1 day chart. Yesterday was its first red day. And you know what I like to do? I like to short stocks the day after the first red day into a key resistance area, looking for a pullback. And I thought at least today, this stock was going to give back a lot of its gains. I thought it was going to wind up probably at this 31 range. I thought it was gonna fall back to about 31.60. That was my guess. Now it did that pre-market and gapped up, but I thought it was gonna come back down here, and it didn't. But at some point, this stock is gonna gap back down. All stocks will always find their way back to this is the simple 50-day moving average. They always find their way back there. The moving averages are like magnets, especially the 50. And if you notice, when stocks get below it or above it, so like here's above it, this was back in October, gets all the way extended to $30, finds its way back to it. Gaps up, finds its way back to it, this below. Runs all the way back up here to $35, and then eventually touches it down here at 32, gaps up, and then breaks below it. At some point, every stock will always find its way back to the simple moving average. And then when you have gaps to fill below, at some point stocks, not always, but most times, they're usually going to fill that gap. All right? Now, if you notice, every time the stock has a run, it gaps up, pulls back, gaps up, pulls back, gaps up, pulls back, has a run, pulls back, has a run, pulls back, and then it has this big wash, right? So, usually at this $35 level, that's as high as it's gotten over the last year, and it had this major tank. But when it's about at this $30 level, it's been kind of struggling to break 30, and it finally did, got up here at 32, and now it's at 33. Now I expect it to move back. Now this is my rationale. Okay, now today, let's just do the 5-day 1 minute. This didn't have a lot of volume, and this is the challenge I have, guys. I trade from work when I get a chance. When I can access it, I access my E-Trade account, because I used to be able to access Thinkorswim. I can't even access that. I can't even get access to the charting, and I use the E-Trade charting. I love Thinkorswim charting a lot better, but you know, you got to work with what you got. You know, my goal is to go back to Centerpoint and then use DAS platform and trade with that, and then take a lot more size, because you know, Centerpoint, like, it's expensive, but the executions are really good. And so, you know, you could take a lot of size with them and you get executed really fast, and that matters a lot. Now, this was my thinking with this stock. So let me pull up. Well, actually, let me start with the 5-day 5 minute. Right, this was the high. Okay, this was the pre-market high on the 12th, right? Okay, so now, you know, this thing gapped down and finished red on the day, right? So you have some, so you have the high here, and you have some, so you know, you have some right here, some good support here. You have some good support here at this 32.61 level, right? If I zoom in here, you can see right here, here's the support, and then we got some more here, some more support. People ask me where support, so you know, where the consolidation area level is. That's really where, you know, that's where a lot of either support or resistance is, depending on whether the stock is above or below this, or below that area, right? So, and then we have some good sort of right here, we have some support here as well, 32.46. Now, right, the market opens today, so let's just do the 1-day 1 minute, right? So the market opens, you know, it starts gapping up pre-market, and you know, this was gapping up. Now I'm thinking these are bag holders just covering, right, during the spike. The market opens, and look, it gets rejected by the 32.46 level. Okay, I actually took when the stock gapped down and gapped up, I actually took a short. I actually took a short here, right, originally, and you know, the stock gapped down, and then I actually posted something. I saw it using my Thinkorswim charting. Let me pull this down. Yeah, sorry guys. Okay, so here we go. So I actually posted it here, all right, when on that first pop, and I posted it because I got short here in this 32.40 level. I got posted at 32.39, and you know, I thought that, you know, more than likely this was gonna gap down and start fading, but as you can see, it started just kind of trading in this wedge. Look what happened. Now this is what I kind of like, because I didn't really have access to my chart. I was just looking at the mobile at this point, because I made the trade and then I was just tracking it through the mobile. Look where it kept bouncing off. It kept bouncing off that support level. Now let me zoom out, right? This is where, look at the consolidation here. There's a lot of support here, and you know, as you can see, it gapped down. Now it gapped back up again and retested this, and I actually shorted again. I actually sized in a little more. I actually caught it around here, and I actually bought more shares to short, and you know, it started gapping down. I think my total position at this point was I think it was like 4,000 shares, and you know, and then at an average of like 32, I think it was 32.42, and you know, sure enough, the stock gaps all the way back down to 32.17. Now I could have covered there, you know, and at that point, I was up, I'm trying to remember, I was up, that was almost 40 cents. So I was up almost $2 grand, believe it or not, in this little shitty thing. And I didn't cover anything, because I saw it gapping up again, and I thought, you know, once it came back down, I thought that it was going to, I saw a triple bottom here, and then at this point I covered half my position, because I thought to myself, all right, you know, it's triple bottoming now. Now this is looking at my mobile. I really wasn't looking at the big picture, realizing that the day before this had all this support, even though I mapped it in my charting in Thinkorswim, but I didn't have access to it. That was the problem. So you know, on the phone mobile app, you can't see, like, you don't see the lines that you draw. At least on my phone mobile app, I think you could on your, if you get like the tablet, but I don't have a tablet. So I covered half my position, and then I just set a stop at my entry, which was 32.46, and sure enough, right over in here, it broke it, and you know, I got stopped out there. So you know, I still did well, but you know, I could have made more money. Now, but look what happened. Now, I didn't, after that, I didn't really watch it, but my strategy did work. Look what happens. The stock, even though it's shitty, it's low volume, I'm just trying to prove a point here, that the stock gaps up, right? And look what happens. It touches that previous support level, which is now resistance of that 32.61, right? Which was right here in this level. And look what happened. It couldn't hold it. And you could have took a short risking off that level when you saw that it was starting to fade again. Risking that level, all right? And this was the daily high at this point. So you could have risked that daily high at that point. Once it started fading, now, yes, there is no volume here. But even, you know, 500 shares, you know, could still get you $100, you know, a couple of $100. So, you know, and then it just faded all day at this point. So let me put the 5-day 5 minutes so you can see it a little more, a little easier. And then at this point, you know, it just tanked, and it broke below and went red on the day. And look, it got near around that 32.16 level. I mean 32.13 level. And then these are the people who shorted up here covering their short. Now, what I think is going to happen is that this stock is going to fade. You know, and I'll probably put it on watch for Monday, because once it breaks that 32.13 level, then my guess is going to test that this level, the 31.60, and eventually it's going to come back down and break that support and come down. Now, let's do the 30-day 5 minute. I always want to talk about trading trends. All right, and that's my key go-to setup, guys. This is how I make thousands of dollars, because when I take trades like on positions like such as this, just to call it out, when I make trades like this based on key, like if I see something like this and I see a key rejection on a big spike, I go a lot of size. I'll take, you know, depending on the cost of the account and all that, I'll take 5,000 share positions, 10,000 share positions. I'll take big positions, risking off that, because my risk is so little, you know, and I can make a lot of money, you know. Sometimes, you know, I can make 5,000, 10,000, 20,000, 30. I've done that before, you know. I just don't post it, but I've made a lot of money trading the markets. You know, so let's talk about this real quick. I just want to talk about trends. So let's look. This is a 30-day trend. Now let's look at the stock, right? I'm just gonna map out some key support and resistance levels. Let's start here, right? This is and I'm just using FTI as an example. So this is the low over 30 days. This is a 30-day 5-minute chart, right? So we have some support here, right? Here's some overhead resistance here where there's a lot of consolidation, right? And here's some more here, and we got some more here, and some more here, and some more here. And you know, and it starts this run, right? So let's put some here, and here's the kind of high, and we got some support here. I'm just doing this really quickly, right? Okay, just to prove a point. I just want to prove a point. When a stock is in a trend, right? So right now this is an uptrend, right? So you see an uptrend. Let's zoom in here. You see an uptrend, right? So stock caps up, right? Starts breaking up. At this point, this is some resistance, overhead resistance, and you see it starts consolidating, breaks above. That support becomes resistance. That resistance becomes support. I'm sorry. And then, you know, you get clear tests of levels, and then, you know, you can see right here that was resistance, now it becomes support. It consolidates and starts running, right? And you can see that the stock gaps up each day. You know, it has another test. Look at this. It gaps up here, gets rejected, right? Here's this was this day's high right here, and you know, consolidates here, gaps up, couldn't hold this area, right? And it starts trending down. But look where it bounces off. It bounces off a previous resistance level, which becomes support, right? Look at the gap down. Look where it holds. Look at how it starts up. Now look, this was a previous day's high, right? This is 2 days later. Look what happens. Gaps up, can't hold it. Grows down. Look at this. It consolidates in that level, kind of, you know, going up and down. And then sure enough, at some point, that resistance becomes support. All right. Well, let me zoom out. Sorry, right here. That resistance becomes support. Look, eventually finds its way above it, and it holds it. Okay, it holds it right here. All right, and then it starts ripping up. Okay, now this is what I want to talk about. You know, eventually it gaps up, pulls back, and you can see it gets all the way, right? So it double tops here, right? So this is the top of that trend. Now, over 2 days, it can't break this 31.32. So now it's starting to gap down, right? So this is what happens. Here is the day, here's the red day, okay? So this day, this stock finishes red, right? It gaps down, excuse me, March 13th, okay? This is the beginning of that first downtrend, right? And on this day, it hit a high of 31.38, and the stock closed here at 30.29, right? And you can see, this is the top, this is some support here. Here we got some more support. We got some more like support and resistance here. There's a lot of consolidation right around this level here as well. Okay, so now what happens? The market opens next day. So in theory, this would be the day that I would be looking to short, because this is where it started its run over here. Okay, back when it was in this $28 level. Oops, sorry about this, guys. Back when it's in the $28 level, and it got all the way up to $31, right? So it's up, and it has these gaps to fill below and everything. Okay, so now this is where the big red day happens. So the next day, look what happens. I just want to prove to you something. Stock opens, look what happens. It spikes, it can't break that previous support level. Look at all this consolidation here. And this is me, this is where I like to attack. And plus, look at this. It's below the simple 200 and 300 moving average. Look how it's tapping those moving averages, and it can't break above it. They're acting as resistance barriers. But putting aside the resistance, the moving averages, forget that. Just focus on support and resistance. If you notice, look what's happening on the downward trend. Okay? You see that it can't break this level of support, which is now resistance. And look at all this consolidation. You need a lot of volume for it to break. And this is the beginning of a downward trend. And this is what I like to do. I like to short stocks in downward trends. FTI is a $30 stock. I'm showing you this on a $30 stock and not a penny stock. But the premise is the same on a penny stock as well as the $30 stocks. Look what happens. It's hitting that resistance. It can't hold. And look what happens. It just faded all day. All right. And look where it bounced off of. It bounced off a previous support level. Oops. Let's see. Here it is. Right here. Bounced off this previous support level right here. Look what happens the next day. The next day, right? So it's still on this downward trend. I just want to show you. Okay, right? So we have some here, right? We have some other resistance here, which was played as support. Now it's going to become resistance. Market opens. Look, it can't even hold this. Look at the pop. It can't even get there. So you could short, risking that $29.99, taking it down. All right, and look at all the way. It got down to here a low of $29.09. Okay, and look at this. It starts gapping up the next day, right? Has a run, but look, it can't break that overhead resistance of 30.14. So right here, you could take it short. And sure enough, you know, it starts fading. It kind of consolidated all day. It never really broke down. But the next day, look what happens. It pops. It can't even hold this consolidation level. Look at all this. It can't even get past this. And you could have shorted this. And this is just the downward trend. And this is all based off support and resistance, guys. That's all you're doing. That's why I don't understand scalp traders. Like, not to quote, I think he's an amazing trader. A guy like Madass, who makes a lot of money trading, he's like in and out scalping. But if he was to hold his positions a little longer, like when a trend is down, he would make 4 times the amount of money he's making. You know who gets it? Steven Ducks. That's why I like him, because he trades the trend, and he, instead of getting in and out in 2 seconds, he'll hold the trend as the trend is riding down. And I'll give you an example, and I hope this makes sense. That's why I like to use, that's why it's good to look at a bigger time frame to know when to make a trade. And if you notice, look, the stock, as it has another run, so it, you know, hit that low of 20, $9 and it starts gapping up, but look, it gets rejected by these key resistance areas that were support areas previously. You see, look, gaps up, boom, gets rejected. That was a previous resistance level, which a support level, which came resistance. Look at this. It's just basically bouncing off key support and resistance levels. Look, the chart is telling you itself. Okay, look, and that's all you need to do to trade. That's why you should map out when you're looking at a stock. Put like 30 days, 5 minutes, especially a stock that is trading with a lot of range, in a range like this, because this will help you determine where you can long and short stocks. So now it's on this upward trend. It's consolidating here, but I think this is gonna this consolidation. It's not gonna 31. That it touched this 3064 level. I don't think it's gonna get back up there. So if I see it starting to fade, you could take a short risking off that level. I think come Monday, this begins to tank again. Now let me show you guys something. Okay, let me show you guys something. I want to show you Steven Ducks. So today he's made he claims, I think he's telling the truth. I was thinking even about going to see him Sunday at MIT. I was just there 2 weeks ago. I'm debating. I got the tickets free. I'm just curious but him and I trade exactly the same. Today he made $12,000 shorting GERN. All right. Yesterday I made about 8,000. Well, no, 7,200 I think it was altogether shorting RIGL. All right, with E-Trade. But now GERN, I'll tell you why he felt comfortable shorting this. I can tell you exactly what he did. It's exactly what I'm talking about. Let's put up GERN. Sorry, my charting has been bad. I don't know, Thinkorswim lately has been really lagging. All right, so GERN, right, has gone on this crazy run, right, from 1 to 6, and then it tanked, and it finally found some support here. Like this is 326 level, and if you look, this is kind of where it was support previously. And this is the daily chart, right? So, and if you could, as you can see here, this is the daily. I'm just gonna map out key support resistance level. So this 448 is a key. Is a level of resistance, okay? All right, and over here, this high here of what is this? 458. So 458, all right, is a key level. Now let's pull up the daily chart. I'm gonna pull up the 5-day, 30-day 5-minute, just so you can see. All right, so yesterday GERN for whatever reason started spiking, okay, and you can see, right, that pre-market, okay, so it gapped up all the way. This was actually today, this morning, it gapped up to a high of this 453. Now if you remember on the daily, 448 and 458 were, if we look at the daily, those are areas of resistance, right? Those are areas of resistance. So if we pull at the 1 year, 1 day, right, I mapped out those key areas. Okay, and that's what I did with RIGL, right? So these are the key, I mapped out those resistance areas, right? So this is what Steven Duck sees, right? He sees that those are key resistance levels. And let me do this 5-day 30-minute. All right, look at what happens here, guys. This is what he sees, and this is why you got to look at the big picture. Okay, when the stock started gapping down, right, look, you got a big area of consolidation here at this $5 level, right? You have a big area of consolidation here at this 485 level, a big area of consolidation here at this 470 level, and then look, 448. Look at this. You got this big area of consolidation right here, 448. You see it? And here, let me just clear all this just so you can see. 448. Look at this. Look at this consolidation right here. Right here, 447. All right. This entire area here, especially 447, 463, and then on the daily was 448. Remember, look what happens. Okay, so you see that big area consolidation. Look what happens. Pre-market, the stock gaps up, touches this, consolidates point, and you get that quick spike. Look at this. This is the body of the candle. You see, it's getting a lot of selling pressure. It can't hold this. And then that next candle, you see it's already starting to fade. So Stephen Duck sees this because he sees that 447 is such a major area of resistance because there's so much consolidation here. You see, it needs a lot of volume to break this, and he sees that with the candle wicks and the pressure, there's not that. Plus, this is a stock with a tremendous amount of volume. In this 5-minute time frame, it's traded almost 2 million shares. So it needs a lot of volume to break that and to continue higher. If we pull the 1 day, 1 minute, all right, to continue going, 14 million shares traded for the entire day. All right, it traded 14 million shares. You know, it trades a lot of volume. So, you know, taking a 10,000 share, 20,000 share, 50,000 share position is, you know, 100,000 shares, which he took when he made $100,000, shorted it the same day I told everyone to short it. Is not a problem because you're gonna get executed easily. And Thinkorswim, and Centerpoint, the executions are so amazing. They're so fast that's why you see all the big traders use Centerpoint. Even though they're expensive, they're worth it because you can feel comfortable taking a lot of size because the stocks you get executed really fast. That's why I want to go back to Centerpoint so I can size up more. And that's what he saw, and so he shorted, risking off the high. You know, that's it. And he just wrote this down. See, a guy like Mad Ass Trader who's a scalper would short this, and then he probably would like cover like right here. You know, he would then like cover right here or something like that. You know, instead of letting the trend happen and riding it, you know, where he can make much more money. That's why I don't think scalping is the way to go. Even, you know, it looks cool, but you know, I feel like scalping is, the edge is not in scalping. The edge is in riding the trend, and that's why Stephen Ducks understands that. He understands that, and that's why I like his style of trading. He trades the trend. Look, BDR. I wanted to short BDR today too. He and I saw the same exact thing. BDR, E-Trade did not have shares to short, but I'll tell you why he tried to short it. Because if you look at the stock over the last 30 days, this is that day where it gapped up. That I remember this. This was like last week, where, you know, it spiked. It couldn't hold that 150 level, and then it tanked. Why couldn't it hold that 150 level? Because when a stock spikes, you gotta immediately pull up the 1-year chart or the 5-year chart and see where the tops were. You see how it spiked this day, 129, and couldn't hold it and tanked. That's what it. And then look at on this day, it hit 158 and it tanked. You know, that's what. So that's what he sees. And sometimes, you know, you gotta go a little further. Here goes 120. I'm sorry. Yeah. Oh, I had it here. All right. Let me go further back. Let's do 10 years. All right. So when you go back further, look, on this day it hit a high of 129, and then this day it hit a high. Look at this, 150. I had mapped this from before. This wasn't today. This was from a previous day. But look, 150, 155. Look at the consolidation here. All right, there's a lot of consolidation here, so it'd be hard to hold this. And every time it gaps up, what does it do? Tank. So let's talk about today. So all he did, right? He maps out his lines, and he saw the stock gaps up, right? 129 was a previous support level, right? Which is acting like as resistance now, right? And let me just right, because again, let me pull up that 1-year chart. This is what he sees. That's what he sees. On this day, it gapped up and held, and then it just gave it all back. So he sees that. So when he looks at the chart, he sees the stock gaps up. Look at this. It can't hold that 129. Pulls back. Gaps up. Can't hold it. Gaps up. Goes to 138. Look at this. Consolidation. Gaps down. So all he did was he probably saw it spike and shorted into the spike, risking the 129. And it gapped down. And then when he saw it hit 138 and couldn't hold it, he probably took some size here. And there's a lot of volume in some of these candles, in some of these 5-minute candles, so you could get executed and just roll this down. And that's why he made $800. He probably, he probably, you know, took like a 2,000 share position or something like that and just took it down. That's all he sees. Now I'll tell you what I saw with RIGL. I got lucky with it with RIGL in the sense that I just happened to have a few minutes and I logged in and caught the spike. E-Trade is very good with the scanners, like catching the scanners. It's just as good as Trade Ideas, to be quite honest with you. It's pretty cool. So yesterday, how did I know to short RIGL? Because when I caught the stock spiking, let me put the 5-day 1 minute. This is what I did. I actually caught the stock starting to spike like right in here. It popped up on the E-Trade scanner here. As soon as it popped up on the E-Trade scanner, what I immediately do is I go to 1 year on the chart, right? And all I did was, when I looked at the 1 year, I said, okay, where's their overhead resistance? Because I see that it's starting to, you know, break 4. So all I did was map out my overhead resistance, and if you can see right here on the daily, it hit a high 454, and this day hit 454. So 454, and then right here, high at 461. So, you know, right around here, there's overhead resistance. So all I did was, when I caught it catching up, I saw right in here that it couldn't hold it. It couldn't hold it. So I immediately, when I saw that it tapped this and started tapping this, I went short. That was it. I went short. 449, I got executed. Boom. I went short. And it kept gapped down, it gapped up, and I wasn't scared. I knew that this was a quick cover spike. This was people who, like me, shorted and covered quickly because they saw right here there was some support. There was support here, so they probably just was like, you know what, fuck this, I'm gonna take my profits. And you know, I just held through this, and then it just completely tanked. And if you notice, the stock, you know, gaps up and it always gives it back, and that's all I did. And that's what he does. So the two charts that I showed you, shorting into resistance, shorting spikes into resistance, and catching stocks on the downtrend, shorting when a stock is beginning its downtrend, like GERN, when I told everybody to short. Let me go back and review this before I end this. Remember when I told, this was let's see, let me go back. I'm in RIGL, sorry. Let's talk about the big day. He and I saw it exactly the same. It's funny, we had exactly the same thing in mind. So here, right, this is, let me remove all this. Okay, so this was yeah, this was the day. I think it was this. Was it this day? Or was it this day? I don't remember. I think it was here. Yeah, I think it was I'm trying to remember, because it was a big wash. It was the day where it touched like 5. I don't know if it was G. Yeah, I think it was. I'm just trying to remember which day it was, guys. I'm sorry. It might have been, if I'm not mistaken, well, it actually wound up going to 3 a couple of days later. So let me see which, let me pull it back. I'm sorry, guys. I'm trying to remember. I think it was right around this time. Yeah, it was in this day. It was around this day. So this day, right, I'm trying to remember. Yeah, I think it was this day where, you know, it finished red. And here, let me pull up some support and resistance. So here's some. I'm just trying to remember. 5. No. It was some. I forget which day it was. Shit. It might have been this day. It might have been here. Yeah, because this is the day it gapped up, right? And then, you know, it gaps back down, it closes red. Now, I just want to show you something. When a stock has this run, right, and then it kind of, you see how it has this gap up, right? So here it breaks the, this is the morning high, breaks it, gaps up to 667, comes down, finds support here, right? Finds resistance here. Here's some more support, and right here some more resistance, right? So what happens? The next day, And then here, so we have some more overhead right here, some overhead resistance too. So what happens? The stock market opens, and look what happens. Gaps up. It can't break that, and what you do is you take a short risking off that, and look, it went from 610 to 553. Now it doesn't seem like much, but this had tremendous amount of volume. So he took 100,000 share position and shorted it, and I don't know if it was on this day or the following day, but he shorted it one of these days. I can't remember. I think it was GERN. Yeah, it was GERN, where it might have been this day. Yeah, it might. I think it was this day. So look, just to show you guys something. Let's look at the support and resistance. Right, we got it all mapped out here. Right. So okay. So then what happens the next day? Gaps up. Look, it can't break 649. Right, which is that high. Let's pull this up here. Okay. Let me make sure I got all the key support resistance levels here. Okay, look what is happening. It's bouncing off these key support and resistance levels, and sure enough, this day it opened red, and look what happens. The stock opens up, can't hold, can't break these now. Now these previous support resist levels now become resistance. You see this 543 level? Look at this. It can't hold it no more. And look, it's gapped down to $5, gaps up. Post market, this is just people covering, and look, it just completely tanks. And on this day, you know, the market opens, and look, this is the new low. Oops, look what happens. Stock gaps up. Look at that, can't even get there. You can could have just shorted this down and killed it. And you know, then it came back up, and look at this, can't break this again, can't hold 449, and you could have retook this down. Look what happens, guys, here. That 449, right, which was a key level here. Look, a lot of consolidation. It continues to trend downward, and then sure enough, look, it starts spiking, but can't hold 449. Gaps down. That's what he saw. He saw all this consolidation here and just took it down. That's it. And I do the same exact thing. And if you notice here, right, let's just map support and resistance here this day, right? Let's just do some consolidation here. We'll put trend here, right? Here, and look what happens, guys. This was on March 28th, right? Tanked at 343, starts gapping up, gets to this high of 476, which was the high. It couldn't hold this, starts gapping down. Look at this, it couldn't hold 407 on this day. Not a lot of people trading it, but you could have shorted it risking that pop, because you know it's a clear resistance level. Look, it gets down here. Let's put another line here so you can see. Look what happens, gaps up. It gets here, can't hold this, and back down. Look, it's just bouncing off these levels. And look, this now acts as a clear support line, and you could have shorted it on this day, because look, 380 was a clear now it becomes a clear resistance level, which was a support level. And if you just look at a stock from a high level overview like that and mapping out your key support and resistance levels, you can see a trend forming in a stock where you could potentially trade it long and short, you know. And that's why he shorted it today. That's why he knew that. And that's basically what trading is. And guys, and stocks tend, you know, every time they have a run, they tend to give back their gains. So imagine if you start trading this, shorting this on the downtrend. Oops, you start shorting this stock on a downtrend here, and let's look at it. Right, it starts gapping down, find support here. Look at this. This was support here, now becomes resistance, can't hold this, gaps down. Look at it, can't hold 545, gaps down to 511. Can't hold 445, gets above it, can't hold it, gaps down. Look at this, all these support levels are now acting as resistance. You see? That's all trading is, guys. That's all trading is. It's just key support and resistance levels, taking trades. So you know, I'll make a watch list video I guess Sunday, maybe tomorrow, I'm not sure. But I just wanted to show you guys that the edge to me is in shorting and just breaking, you know, breaking down, taking shorts, risking off areas of that were resistance becoming, that were previous support levels now becoming resistance. And that's it, guys. So again, you know, just make sure you oh, NETE. I could talk about this before I hang up. Before I end this. So NETE, I was frustrated. Let me just pull this up real quick, and I'll end the video. with NETE, I actually was trying to short NETE. Where was it when it was attempting? Here's where originally I tried to short NETE. I tried to short NETE right around here, and there was no shares to short on E-Trade. So then I caught NETE here later on, and I saw that it attempted to break 10. But I said I put on it needs to hold 10 in order for me to take it. And you know, it broke above 10 for a second, came back down. You know, I wasn't comfortable with this. I needed to see it test it and then gap up and maybe test it again, because the way it was trading on the level 2, I just wasn't comfortable with it. So what happened was, the reason why I took a scalp trade on it, let me see if I can zoom out. Right around, I think it was here. I think it was around here. Let me zoom out. It was right around here where I saw the stock. It kind of like started gapping up, and then it gapped down, and I saw right in here, I think it was in this candle if I'm not mistaken. I actually took a long, because this is what I saw. I saw it bouncing off the simple 50 moving average and holding this level. So I said, you know what, I'm just gonna go long. Once it breaks over 970, and right in this candle, I went long. I went just 1,000 shares, and I put my stop actually at whatever the simple moving average was, which I think at that time was 969, and it started gapping up. You know, it started moving up, and it got to a high here of 979, and I thought, okay, maybe it was gonna, you know, start moving, and then boom, it just tanked. And actually no, it was over here, because it actually cracked. I think it was closer to where the crack was. It was I don't know if it was around here or around here. I just can't remember. But I took a small loss. I set a stop. I actually usually don't, but I did, because this was so volatile, and I was just hoping that, you know, it was gonna bounce off here and then just break the 10 and run. But it didn't do that. There was a lot of overhead support. I really wanted to short it, risking 10. That's really what I wanted to do. And had I had that chance, man, I would have banked. But there was no shares to short with E-Trade, unfortunately. So that was my trade. All right, guys. So and you know, this is a dog shit, and it'll give it all back. If you look at the yearly, you'll see, you know, every time it has a run, it craps, gaps, craps, gaps, craps, gaps, you know, craps. And this is why I wanted to short it, because look what this 982. There's a lot of consolidation here at this $10 level. So I didn't think it was gonna really, you know, hold 10 too well. If you look at it, you know, right around here, see, a lot of consolidation here, $10. That's what I do. You have to look at the daily. You have to map your support and resistance to know where it could potentially get rejected. All right, folks. So that's it, guys. So I know this was long, but I hope it's informative. All right. So have a great evening and a great weekend. All right. Take care, guys.